In the previous two videos, I explained a few financial terms and backstory about how the whole GameStop situation came to be. In this video, let's examine claims of market manipulation, the response to the massive buying frenzy, and the brokerage drama. I promise it's spicy, that has seemingly sent GameStop on a rocket to the moon. Although as of filming, it seems to have cooled off. The first interesting thing I would like to point out is that there seems to be general bipartisan agreement about the Robinhood situation. For example, Ted Cruz and Alexandria Ocasio-Cortez, who could not be more apart in terms of political views, both agree and condemn Robinhood for the drama I'll cover at the end of this video. Politicians on both sides that agree? That's kind of wild. The second point I want to cover is what I think is the ridiculousness of some reporters / analysts to the whole situation, who say that WallStreetBets is doing market manipulation on these stocks. I've seen so many analysts and reporters say, "This is market manipulation, GameStop isn't worth this much." I agree that GameStop, at least currently, shouldn't be worth this much. But to this I respond, how do you determine the real value of a stock? Simply, you can't. A stock price is determined by what other people think the stock is worth. And in 2020 and 2021, prices have deviated from what people think it should be worth. An analyst in a CNBC video even went as far as to say there might be foreign powers at play here.
I could argue I don't even know if there are foreign powers at work here behind the scenes trying to make chaos of our market.
Are you kidding me? You think that if a foreign country wanted to take down America, this is how they would do it? First of all, we seem to be wrecking ourselves just fine. Just look at the number of cases in the United States versus Australia. But second of all, there are probably much better ways to bring down a country, whether it be financially or otherwise. Not that I would know, obviously. I also want to add, I fail to see how looking at statistics and information on the internet about a stock and making an investing or trading decision is market manipulation when funds or firms publish price targets and short reports. Let me explain. Sometimes large firms announce price targets for stocks in which they explain what they think about a stock and what they think the price will be in the future. Similarly, short reports explain a stock and why a firm or fund thinks the price will drop in the future. In both cases, the firm or fund has already usually purchased the shares or shorted the stock beforehand, so that if the stock moves in favor of the report, they benefit greatly. Just from personal experience, anytime a large firm such as Goldman Sachs or JP Morgan publish a price target for a stock, it seems that the stock moves to the price target super quickly. I don't know if this is because other people see the same values and agree with the analyst, or because other people think that other people will agree, which will cause the price to go to the price target. We'll never know, but in either case, the firm publishing the report usually benefits. I fail to see how someone can argue that what is happening to GameStop is market manipulation and the scenarios that I described above are not. Actually, I do believe there is market manipulation, just not at the hands of WallStreetBets. I think the market manipulation is when the hedge funds were able to short over 100% of the available shares. I'm sorry, hedge funds, but in my opinion, you have no one to blame for a short squeeze except for yourself if you short more shares than are available. On January 27th, Melvin Capital allegedly closed their short position. I say allegedly because they may have made the announcement in an attempt to push down the stock price, but that's just speculation. And another side comment on Melvin, have they ever heard of risk management? Whenever I go into a trade, I have proper risk management and make sure to take profits and try minimize my losses. With losing 53% of their assets under management in January 2021 alone, I don't think proper risk management was exercised, but who am I to say anything? I'm just someone making YouTube videos on finance for fun and invest in trade for fun and for my future. Anyway, that's enough about Melvin for now. Now onto the Robinhood drama. You've probably heard of Robinhood, the brokerage that took the world by storm by offering zero commission trading that led other large brokerages like TD and Schwab to lower their fees. Their mission is to democratize finance for all, hence the name Robinhood. What was their response to the GameStop scenario? How did they give everyone access to the financial markets? Well, naturally, they banned buying stocks such as GameStop, AMC, BlackBerry, etc. on January 28th. Note that they didn't restrict selling, you just couldn't buy. If you think about this messes up the natural supply and demand for a stock. If people are only allowed to sell, this pushes the price down, right? And so it did. GameStop reached a peak of around $460 intraday on the 28th before crashing down to $132 a share, before slightly recovering. Note that other brokerages such as Webull also blocked buying of these stocks, but I'm focusing on Robinhood for a reason I'll explain in a little bit. So one, I believe to be valid explanation for why a bunch of brokerages restricted trading on specific stocks is because of something called a clearinghouse, and all brokerages route their trades to clearinghouses. The specifics are not super important, but just know that clearinghouses have deposit requirements for brokerages, i.e. brokerages have to deposit a certain amount of capital per day to allow their users to purchase shares. Due to the volatility and increase of volume in trading, clearing firms drastically increased the deposit requirement, and some smaller brokerages were unable to front the deposit requirements, something the Webull CEO actually explains really well in a Benzinga interview. Because of this, it makes sense to me why some firms were unable to support buying of these stocks, as they don't have the capital. However, where I have the issues with Robinhood is how they handle the whole situation from a PR perspective. In an interview with CNBC, which I must note has 2,000 likes and 23,000 dislikes, the Robinhood CEO says,
"In order to protect the firm and protect our customers."
But it sounds to me, though, that you're suggesting that there was a liquidity problem.
No, there was no liquidity problem.
There was no liquidity problem.
All he had to say was, "Sorry, we don't have the capital to cover these trades, please be patient with us," but he didn't. Anyway, I think it was partially valid for smaller brokerages to restrict trading on these stocks. However, the message this sent to retail investors was that they supported the hedge funds and they were trying to drive down the price, and that's kind of the vibe that I got from their Robinhood interview. I'm not saying one opinion is correct, but I just wanted to lay all the facts out. That was a lot. I hope it was informative, and I'll be continuing to cover and educate about the situation as it continues, but I'll also be uploading general investing, finance, and trading videos soon. So subscribe for everything money and finance. Cheers.